All right, you guys. Well, today's video, we're going to take a look at Hedera or HBAR. There is a few things here that's kind of alarming for me on the charts, but let's quickly take a look at some fundamentals. So quickly taking a look at CoinMarketCap, we are still highly ranked at number 15. Price is sitting at 0.3035. We are down 3% of the day. I mean, all of our coins that we're following is down for the day, but what is kind of catching my eye is the volume itself. So roughly around 34% in volume has dropped, again, kind of signaling some reduced interest in terms of the buyers itself. And the circulating supply here is around 38 billion compared to the max supply that we have is 50 billion. So quickly taking a look on the daily chart itself, we're going to start off on the daily chart. We can see again the price itself action has closed below our 20 moving average. This does confirm some short-term weakness. It's now hovering around our 50% of our Fibonacci, and this is going to be the immediate area of resistance. We have seen this descending triangle essentially break in the last couple of days here. Again, hence descending triangle, multiple retests of these area of support, and a lot of making a lot of higher low swing candlesticks. So it was going to happen in terms of this breakout. Now, as another area of support here, we could possibly pull our trend line from the previous symmetric triangle, but immediate support here is what we're going to take a look at is our 50 moving average. If we see rejection closer to the 50% of our Fibonacci level, then this is going to be our secondary line of support. And I should be bringing this tool out a little bit more on my videos is our volume profile. I am just going to pull out the fixed range so I have control as to what volume that we are taking a look in terms of price here. So what we see in our volume profile is how much volume produced at the dollar amount opposed to the time frame. And this is a good tool to use if you guys are familiar with support and resistance. Essentially, we take a look at these clusters that generated the most volume at this dollar amount. So we're taking a look at the area of 0.298 coming down to just above our 38% of our fib at 0.28. Now, this area itself is treated as an area of support if the price is found above these clusters, or as an area of resistance if the price is found below. So as we can see here, the price is kind of hovering right above this area of support. If the support does break, most likely we're going to see the price kind of consolidate throughout this area, depending on how supported the bottom support line is at 0.28 cents. Now, what we can kind of take a look at here is essentially the candlestick itself. Now, in the other videos that I covered today, we were seeing a lot of potential piercing bottom candlesticks, which is a reversal. And how it plays out is once this green candlestick kind of opens up its body and closes 50% or more of the previous red candlestick, it does show us that the buyers are in play here. They're defending this area of support. Now, for me itself, to be on the safe side, to have that secondary confirmation, we will need to go into tomorrow and see if we're seeing any green engulfing candlesticks, green bullish candlesticks after a potential piercing bottom. And that will give us confirmation that the price itself is going to come up to an area of resistance. And unfortunately for us here, the resistance line isn't that far itself. So the immediate resistance will be 31.5, the previous area of support here. And if we can take a look closely, it does look like our 20 moving average is going to collide here around our resistance. So not only we have the support turned into resistance, we have a secondary line of resistance. Typically, if there's two indicators colliding together here, it's going to be considered as a high area of confluence. And that's just basically meaning a lot of traders may be looking at this area and seeing, are there going to be buyers pushing the price and seeing how this kind of plays out. So there may be some hesitance in coming this area to resistance, but if we do fail to break this, we may come down into this area of support that we used our volume profile. Now, if we do kind of zoom out in a longer frame to kind of take a look at what the primary trend is, we are still in an uptrend. Like, don't get me wrong, we're still in an uptrend on the weekly. And if we take a look on the monthly, we are still in this uptrend. And if you guys already caught that in the video here on the monthly time frame, we see a potential golden cross formation. I'm going to say potential because the month isn't quite done yet. And this is simply formulated when a smaller moving average, R20, moves across and above a larger moving average. This golden cross scenario kind of just shows us potentially what may happen in the future. And again, with the golden cross, it is a bullish trigger, a bullish sign itself. But most importantly, when we take a look at the weekly time frame, we're going to be using our support line here, our trend line, as an area of additional support if the 38% of our Fibonacci fails to hold. So kind of let me know what you guys think. I'm almost kind of thinking this is kind of the make it or break it here for Hedera. I feel like if we do lose momentum in the 50 moving average, we may kind of come down to this trend line, which again is kind of our third area of support here, where ideally we don't want to see Hedera itself kind of tap into it because it's kind of a ripple effect. Whatever happens on a shorter time frame does affect the overall. I am hoping again our daily piercing bottom does actually occur, but then there is that immediate resistance that we kind of essentially need to break above. But let me know what you guys think down below. Thanks so much for tuning in today. Hope you enjoyed the video. Sometimes I do talk a lot. I apologize for that, but do like, subscribe, and comment down below, and I'll see you guys in the next one. Bye.